Bloomberg terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Hello and welcome. You're watching Countdown on Bloomberg Went Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets are muted ahead of the Gujarat exit poll scheduled to be released later today. The Nifty trades with a negative bias. 1% Beverages is the top gainer on the BSE 500 index after the Reserve Bank of India hiked its FI investment limit to almost 49%. WPI inflation hits an 8-month high. Wholesale prices rose 3.3% in November from 3.59% in October. And Gujarat heads to the polling stations for the second round of polls. 39% voter turnout seen till 12 noon.
Well, it's going to be interesting as to what happens over the course of the next 1.5 hours ahead of what will be the last trading hours before we get the exit polls. So remember, the volumes will be higher because it's the Bank Nifty weekly expiry, but the market is trading flat on those very high volumes. I would guess the premiums for the put options would have gone up even further. Remember, the 9,900 and 10,000 put options have almost doubled in the last 3 trading sessions. I would guess that those have moved up even further. The Nifty Bank, which also went down to the low point of the day and from there recovered, almost identical chart to the Nifty and pulling back the index along with it. The heat map will show you, or the market breadth will show you, that it would probably be even Stevens. I don't think there's too much of a deviation there. The red versus the green, completely even Stevens. TCS is the big loser, 3.5% in the session today. And couldn't quite place as to why that would be the reason, but that's a very interesting trade. That aside, the standard Bajaj Finance for the last few days has been falling apart, and this day is not different. Now it's cracked about 16 or 17%, so that's a fairly large gash for Bajaj Finance. And amongst the gainers, it's a slew of IT names, which is I'm saying I'm surprised that TCS is down, because Tech Mahindra, HCL Tech and a few others have done okay, and banks are not trading too badly. Kotak, yes, ICICI are amongst others, which are trading with a fair bit of green, so that's good going. A few mid caps and small caps that I thought I should highlight before we get into what's happening in the F&O space as well. Those will come up on your screen. Firstly, Oberoi Realty and this Motilal Oswal note leading to this upside for Oberoi Realty, so 4.5% higher for that stock. Let's also get in a couple of other movers in trade. I must say there are a few big movers in the session. Tata Communication, I think the cheer has faded. This whole demerger cheer has completely faded for Tata Communication, so not great going for this one. And we're having some gains for Natco after the QIP was done. The pricing of the QIP much lower, but the fact that the money's been raised leading to some cheer for this one in the session today. Last but not the least, 1% Beverages up about 8% after the FI limits have been eased. But Navneet, what's happening in the derivative space?
Well, Neeraj, some bit of cheer as the markets recover from their day's low. We did have a positive gap up opening, but once again, Nifty could not sustain the opening gains. In fact, we also breached yesterday's low mark of 10,170 in trade today. But from thereabouts, considering today's the Bank Nifty weekly options contract, they expire. So we've seen some volatility in terms of Bank Nifty movement, which is currently hovering around its 50-day moving average. It's above the mark of 25,050. What's happening with the option strike? Though Nifty is still trading below its 20 and 50-day moving average, we've seen 9,900 and the 10,000 put strikes actually becoming active. So we've seen the writing coming around those levels of 9,900 and as well as 10,000. But out of the money call strikes are the ones which are witnessing good amount of writing in today's trade. In terms of Bank Nifty, where the expiry can take place, well, the range is pretty large. You can expect the expiry to be in that range of 25,900 on the downside to about 25,300 on the upside. But 25,100 and the 200, both these strikes on the call side have seen huge amount of writing. Let's see if the expiry actually takes place in between that 25,000 to about 25,100. What's been the concern for this market? We're already done with two major events. RBI policy is done. We've done the US Fed meeting is also done. But the biggest domestic event, the Gujarat election result, which is scheduled to come out on 18th of December. Despite of markets being in positive on Monday, we did highlight that the India Volatility Index was trading on the higher side. It did breach the mark of 17 in today's session, though market seems to have recovered from their day's low. But look at India VIX. It's still trading higher with gains of almost 5.5%. It's up almost 22% for the week. Just two stocks I want to highlight. Neeraj spoke about Tata Communication. The move that you've seen, there is on the cash side, the volumes are pretty high. We've seen a bit of long build-up coming about. So watch out for the delivery data in terms of Tata Communication. And Wockhardt is the other counter where some bit of cash-based buying has been seen. So do watch out for delivery data there as well, because the volumes have been higher on the cash side. And lastly, for the futures of Wockhardt, we've seen a bit of build-up coming about when it comes to the December futures.
Well, that's the summation of what the market is doing, but time now to focus on what could the markets do and what should every investor within the markets do as well in a scenario which is as tantalizingly interesting as it is over the next 2 or 3 days. Chakri Lokpriya, Managing Director at TCG Asset Management, joins us right now on the show. There's so much to talk about with Chakri. There's also some very interesting fund launch that they are doing or have already done. Please correct me if I'm wrong.
Yes, in the process.
In the process of. So that's something that we will talk about as well. But Chakri, first, can't not talk about what could happen to the markets over the course of the next 2 or 3 trading sessions. We're hitting these exit polls today. We'll have the eventual result on Monday as well. And quite contrary to what the thought would have been 2 months ago, this one is going down the wire.
Yeah, well, I have a theory, and theories can always go wrong. And the theory is, this time the lead seems to have diminished for BJP, and that seems to be the worry. And in case now if it is a diminished lead, but I would think that given that we have 1.5 years, hopefully there's a greater thrust on employment creation, which is what corporates want. So I think that is one. And second is, if you look back at past elections like Bihar or the states where it didn't go BJP's way, it eventually turned around. So that is the larger hope. And given that we are at a cyclical low anyway in the economy, we should wait and watch for a couple of days more.
How do you think the markets will react, let's say, if the numbers is below 100?
Below 100, it still gets them home. So I think end of the day, getting home is more important than not. So I think that would be actually a relief, given that the exit polls, or rather various forms of polls, are showing lower numbers.
Various forms of polls, I know. That's interesting. I mean, I think the next 1 hour, I remember yesterday, I think the slight bit of nervousness started in the markets after this whole messaging on WhatsApp groups, etc., took fervor, and wherein the betting market said that, hey, could there be a negative surprise from market's perspective? I dare say the next 1.5 hours we could see heightened activity thereof. Let's see if the markets are nervous or no. Yeah. That notwithstanding, Chakri, what about the overall positioning of the markets? Because these days a lot of people that we're speaking to talk about how we anyways need a reason to correct because valuations are very heady. You've done some very interesting work on the BSE 500 ROE. Bank of America Merrill Lynch recently had put out this MSCI India ROE and how it is back to levels, or rather, the ROE of MSCI India compared to MSCI EM is showing a divergent trend, wherein the MSCI EM ROE is picking up, but the MSCI India ROE is not. And your chart seems to suggest that too, that while there's a small pickup, but it's still way off from the levels that it was at.
Absolutely. You know, if I rewind back to the days when I was a BRIC fund manager, Brazil, Russia, India, China. And at that time, we always used to have this chart of India having the highest ROE, being a services-led economy, Brazil being a commodities economy, is very cyclical in nature, whereas China would be much lower. Now, what has happened if you fast forward 7-8 years later, India's ROE has fallen from like 28%, which was the peak, to about 12%. Now, whether we are going back to 28 is a different question, but 12 is a pretty low number. And therefore, we think, and this is because of lots of economic reasons and companies, Indian companies, who have suffered as a result of the economic slowdown. And because of the economic slowdown, they haven't sold as much as they should. Their balance sheets have been stretched, their profit margins have gone down. Against this backdrop, we think we are at a cyclical low, which was turning up.
Can it turn around enough, though, Chakri, for us to get to valuations which would be, or which would justify the kind of premium that we are trading at? Again, I'm borrowing something from that Bank of America report, but they said, according to them that is, that the relative price to book on India is almost at the levels that it used to be post the global financial crisis days of 2008, and the ROE uptick will not be significant enough to take the price to book valuation multiples higher than where it is right now. So they believe there's a bit of a valuation gap, and an uptick in ROE will not be swift enough to justify that valuation gap.
There are two things going on over here. One is ROE. If you look at corporate India today, whether it's a manufacturing company or a services company, their capacity utilizations are very low, 50-60%. So which means from 50-60%, you go to 70-80%, that automatically translates to higher profits, profit margins, and therefore ROEs, without any additional new form of capex. On the other hand, if you look at price to book, now price to book, I think from an Indian context is not as relevant versus a manufacturing economy like China, because India is predominantly a services economy. Services economy, the book is in any case small. And so the uptick is more related to underutilized capacity and or poor demand. So if you provide, which has led to a lack of, rather lower profits. Now, as the economy revives, if you provide that capital, then it comes back.
The reason why the capacity utilization levels have been on the lower side, the private capex has not picked up, and whichever report you pick up today, they're saying the private investment is at a decade low. I don't know when was the last time when India saw this. So do you see that cycle turning, that the private capex will come back into the markets, considering there's so many, the government has been taking a lot of efforts, one of them being the PSU bank, recap?
I think those are good questions. We don't think private capex is going to pick up anytime for the next 3 years, or 2 or 3 years rather, simply because of the low capacity utilizations in the case of manufacturing companies. And in the case of service companies, for example, you take hotels, their occupancy rates are still very low compared to the historical highs. Or you take IT companies, pharma, so you name it. So across service sectors, your utilizations are low, and manufacturing companies too. But what has happened is a mismatch of capital allocation. You're funding long-term projects with working capital. So it has led to a situation where there is a higher cost of borrowing. So if you just refinance it with a lower cost of borrowing, that translates into higher earnings, a sustainable one at that, which translates therefore into a higher stock price. What the stock market is bothered about is not so much about where the growth is coming from, but whether it is sustainable growth. So if you reduce interest expense, for example, that leads to higher earnings per share on a sustainable basis.
So just a very simple question then. Do you think we are running ahead of fundamentals, because most of the FIs have been complaining with regard to valuations of this market?
I don't think so, simply because we are at depressed earnings.
Okay.
And if you look at FI20, your PE is probably 15 times. which is not an expensive number. And if you look at earnings growth is hardly there for FY18. And whereas if you rewind back again to ROE times of 28%, earnings growth of India Nifty was about 35%. From there, you're down to about single-digit numbers. So even if your earnings growth goes back, not to 35, but a midpoint, pick a number, 20, for example, your PEs start looking far more reasonable.
Okay. So, okay, let's talk about now, we can talk about the kind of QIPs that you've been participating in. There's a spate of QIPs and everybody questions the quality of the number of QIPs coming about. But I also want to talk about this fund that you have, this Mayuresh fund, which is a corporate capitalization fund. Why this fund? What's the nature of the fund? And why launch such a thing in a market scenario like this?
Primario, as the name indicates in Spanish, means primary. And primary capital is what we think is the hour of the need. So, against this backdrop of low economic activity translating into low stretched balance sheets. So you have two types of companies: a growth company which wants to expand, let's say Pratap Snacks, strong in the north, weak in the south, needs distribution, needs to lower its debt and needs distribution capital. Capital to increase distribution in the south. So that's capital in the form of a QIP. Or in the case of a bank, they are loss-making companies but need capital to turn around, and therefore infusing capital allows them to return to the growth path. And both of them are institutional forms of capital. So I think this is what is the hour of the need for corporate India. And similar to the bank recapitalization program funding banks, we want to fund corporate India across sectors.
So what would this fund do, and what's the kind of returns that you anticipate to get in from deals like these? By the way, there are a bunch of these PSU QIPs that have started. Would you be when you get the mandate, would you actually look to participate in some of these?
Indeed, and I think this pipeline will continue to get stronger, and because it in fact reflects our thesis, that our thesis is actually right in terms of it's a validation of a need for capital. And mind you, this PSU banks revalidation or rather capital infusion is ahead. Not a cent of money has come in fact, from banks yet, from the government yet. So that will also happen. So one of part reason that you're seeing the weakness in banks today is because they're saying, look, we can participate in a QIP at a price discount. So let's wait and rather participate in that. But this, just in the next quarter, QIPs are about 50,000 crores and IPOs is another 50,000 crores. So for you to cherry pick, there's ample opportunity.
Yeah, that's what I was about to say. Vinit?
Okay, going into 2018, what according to you can be the major surprises for equity markets globally?
Equity 2018 globally is, US is extremely strong, unemployment rate's very low, economy is doing really great. So all the export-related sectors, from an Indian perspective, textiles, chemicals, refining,
what about
metals.
IT, pharma?
IT and pharma have been hit because of their own mistakes of the past. It's nothing to do with the end markets. And as long as they rectify themselves, which they are in the path of, and after 2 years of low earnings for IT and pharma, they'll also begin to recover. Now, and the big wild card is domestic earnings, which is largely mitigated by the Bharatmala. It's a $100 billion plus program over the next 5 years. So that even a part of it is done in the next 1 year, 1 or 2 years. That will lead to a significant acceleration of growth. And plus, domestic banks recapitalization by the government is a huge uptick because so far companies have suffered because of lack of capital because banks were not lending. Tomorrow, after the recapitalization, banks will start lending.
So do you see that benefit flowing in the next financial year? Because so far only the announcement has been made. Nothing has actually gone to the banks.
Yes, I think, as Mr. Jaitley said, that he wants to front load the whole thing. And the infusion is going to happen before December of next year.
Okay.
So I think they're still on track to meet the Basel requirements and upfronting capital. And mind you, these QIPs have started even before the upfronting has begun. So the balance sheets after the announcements, for instance, yesterday PNB raised capital, Syndicate Bank raised capital. So they're already to a few thousand crores stronger.
Yeah, that's true. Okay, we have Dollar Industries management joining in, but just before we do that, Chakri, just wondering, before we thank you, what kind of people should go out and subscribe to a fund offering like Primaria?
No, this is for an investor who can stay invested for the next 3 to 3.5 years, because when we infuse capital into companies and they turn around, will take to about 2 or 3 years.
And what's the kind of returns that you expect from these turnarounds? I mean, I'm not asking for your fund, but if you were to invest in a turnaround company right now, what kind of returns would you anticipate over 3 years?
You know, the biggest returns are made in the stock market in investing at inflection points.
Sure.
And inflection points are usually at the time of infusing capital, like an IPO, like a QIP. So returns should be higher than an FT returns.
Okay, fair call. Great. Wish you all the best for this, and thanks so much for taking the time out and joining us today, Chakri Lokpriya, with your thoughts. Look forward to have you more often.
Thank you so much.
All right, that's the view from Chakri Lokpriya of TCG. But as I was saying, Dollar Industries, I don't know if they are in an inflection point or no, but their guidance for the next 4 or 5 years is pretty strong. They've held an investor meet recently, and it's aimed to achieve revenues worth 2,000 crore rupees by FY24. To discuss this and more, joining us is Kumar Gupta. He's Executive MD of Dollar Industries. Good having you, Mr. Gupta. Thanks so much for joining in.
Good afternoon. Good afternoon.
What gives you this confidence that you can reach the numbers that you have spoken about in the time frame? Because I presume from where you are right now, you'll need to double it. It's not a steep number if you consider the number of years that you're bringing about.
We have earmarked a growth rate of 15% CAGR in next 5 years, and we are very much confident of achieving this growth rate because the way we are working with our product line, the way we are working with the separate verticals for women, kids, and so on, we are very much confident of achieving this turnover of another 1,000 crores in 5 years' time, starting next fiscal.
Okay. Mr. Gupta, you operate in an industry where the unorganized market is pretty large, and there was an expectation that post GST, the market share of organized players like yours would be going up. Just wanted to do a ground check post GST. What sort of increase in market share have you garnered?
Listen, in our wholesale industry, we understand that 1/3 of the market is organized and 2/3 is unorganized market. Post GST, there will be a good amount of problems arising for the players who are into the unorganized segment. And everybody is looking at the transformation of business from unorganized sector to the organized sector. We have also appointed an investment banker from our side who is looking into merger and acquisition options. And consolidations also is around the corner, maybe in a couple of months. He's already in talk with 4 or 5 players of the unorganized sector in this category. And surely we can have a good amount of consolidation happening in a few months to come.
Mr. Gupta, did you just mention that you're looking to acquire some unorganized players?
Yes, correct.
Could you just give us a size of that? You just mentioned that you're looking to acquire 4 to 5 players. What would be the size of those players?
The size of the players are ranging from 30 crores top line to the 150 crore top line. They are basically unorganized and also regional players. I mean, they cater to only a particular state or maybe 2 states or 3 states. They are not pan-India. So the size ranging from 30 crores to 150 crores or top line, and EBITDA margin of around 12 to 13%.
But would that be your strategy on pan-India basis as well, to keep acquiring these unorganized players?
Yes, of course, we will acquire them and take them to pan-India.
Okay. I'm just going through the report of Antique Stock Broking, where they've mentioned that the company is now focusing on premiumization. If you could just give us a sense, what sort of margins that you're getting from your premium products, and what's the total revenue from the premium products currently, and what's the target that the company has?
Right now, the product mix, what we have in Dollar Industries, is around 34 to 35% is the economy range, and the rest 65% is from the premium sector. At the premium sector, we have got 3 verticals, that is Big Boss, Dollar Missy, and Force NXT. Force NXT, we have got an EBITDA margin of 18 to 19%, and we see a growth of 100% every year in coming 3 years. Then we have got a brand called Dollar Mystery that's exclusively for the women section of the society. There we have got the EBITDA margin of 16%, and the revenue generation in first half of the current fiscal is around 7.8%. And we have earmarked a growth rate of 50% every year in the next 3 years to come. And then now we are talking of the big boss. We have got the EBITDA margin of close to 12%, and where we have targeting a growth rate of not less than 10% in the coming years to come.
You did total revenues of 1,000 crores in FY17. What sort of total figure can we expect for FY18 and 19?
FY18-19, I mean, no, we did a turnover of 906 in the year 16-17, and we have targeted a growth, we have targeted a turnover of 1,050 for the current fiscal, and then to go with the growth rate of CAGR 15%.
CAGR of 15% after FY18, right?
Correct.
And what about the bottom line growth?
Bottom line, right now, we are working on an EBITDA of, in H1 18, it is 12.35%, but we hope to close it at 13% by the end of this fiscal, and then move on to 15% in 2 years' time, starting from the coming fiscal.
All right, Mr. Gupta, I appreciate you joining us today and taking us through what's happening with regard to the industry. Remember, the knitwear sector is, let's say if the organized market is 7,000 crore, the unorganized market is actually the double of that, and which rightly Mr. Gupta alluded to. So there was that GST benefit, and that's precisely the reason that you saw stocks like Dollar or Lux Industries, Page Industries going up in the last few months. But let's see how the growth pans out. He has given a guidance of almost 35% growth on the top line in the second half, pardon me, of this fiscal, and they're also looking to expand their margins to almost 15% from 12.5%, which was seen in the first half of this fiscal. And higher margins will actually come from the premium products, is what he alluded to, Neeraj.
I'm just wondering, 2,000 crores of revenue, right, by 2024 is what he's saying, from a current about 1,000 odd crores. So over the next 6 years to clock in 1,000 crores or doubling of revenues would mean what? A CAGR return of 12%.
He said 15% CAGR return
or 13% return. That's not steep. Hopefully, they're able to get in this EBITDA margin expansion, and therefore the bottom line may just do a bit better than what the top line would.
Right.
That's why they watch. Okay. So that's the view from Dollar Industries. Speaking of mid caps and small caps, which are doing well or likely to do well, Bolinjkar of Equity Intelligence is bullish on the India story, as he has always been. In a conversation with me earlier on our special series Alpha Moguls, he highlights stocks that have fetched him handsome returns, as well as companies that he's bullish on in a slice of that conversation. In the mid cap and
the small cap. I remember KRBL. We have been talking this stock many times in the past many years. We bought in portfolio management at 20 rupees. I tweeted about this 2-3 times. On the national media also I talked many times. At 20 rupees, this is the global leader in that particular business. Forget about India. And the stock was traded like a penny cap. I'm telling you, nothing changed in this company. The normal visible growth in those days has been happening, and the stock price is today 600 plus, and a huge company. Now today people, the big brokerages, and they all are covering this company. At this, after going up by now 20 to 600 is like 30 times. Not in a decade. This I'm talking about in 3 years. Yeah. So this is just an example. There are hundreds of cases. Now investors across the board, especially the stock pickers, have been making money like this. Everyone, even the smallest guy out there, will have a story to tell that he bought this stock at 50 rupees. Today it is 1,500 or 800 rupees. I'm telling you, you meet anybody in the stock market. But some of them have been traders, and they never invested in equities in the real spirit of it, might have missed opportunities. But still, at least you will say, I bought at 20 rupees. I'm sorry, I just sold it at 80 rupees. Now it is 800 rupees. That kind of a story almost everybody in the stock market has to say.
But what is it that you see differently? I mean, I'm not asking you to recommend a stock out here, but what is it that you see, for example, in a GVK that where you have a large declared shareholding, over 5% of the holding I think is managed by your firm. What is it that you see which is different in GVK that others are failing to see?
So GVK, I was betting on a few factors.
Again, a standard disclosure, that's not a recommendation from you.
No, I'm holding 6.5%
yes,
of
it's not a recommendation.
No, already the prices have moved up also. I was buying from 6 rupees onwards.
Yeah, so irrespective of the price, what are you seeing
so
in
it's at a very small market cap. But here, when we talk about India, now already if you travel out of into Mumbai by flight, at many at a times, you know, the aircraft spend 15-20 minutes before landing. So there is already we are out of our capacity is almost over. And India, the airlines, the people traveling by flight, it's the highest increase in the whole world, percentage-wise. And this is going to continue for next 5-10 years. So the airport infrastructure is a very important thing. We need to have more airports, and we need to have our existing airports being expanded, or new airport one more airport like Mumbai it's happening. Mumbai airport GVK is going to do. So GVK found, in spite of all the leverage kind of issues, there is another side to the story, which is the management capability, the execution capability of this company. Not many companies have. If you want to make a new greenfield airport with so much capacity, I think this is one of the air companies in this country who can bid for that and execute that project. Plus, they went into many, the power projects, the road projects, and some Australian coal mining projects. So now when we look back, they have all done the mistakes, especially the gas-based power. It was not their mistake. They started invested in a big way. Government, there was an assurance of gas supply. Then the gas supply could not be met by the government or by the authorities.
Sure.
And so they had to shut it down. So there is a debt element which mostly banks are going to bear it, haircut. So those things will be cleaned up. I think by the management is giving very clear indication. They want to come out of all this mess. They want to focus on the core business. They have started developing airport management vertical. You know, they have been managing the Bali airport in Indonesia. So without investments. So no need of taking further loan kind of thing. So they may end up managing maybe 50, 100 airports in the future. So when those kind of potential is there in the business model, and the promoters, the management has got a capability to execute, India is one of the best place to be in.
Okay.
And so there is, when I was doing the arithmetics, I found this company can survive. They recently sold out the airport stake, Bangalore airport, one of the most beautiful airport in India. They sold out the stake, I think with a lot of pain they might have done it. And they reduced the debt with that money. So there are symptoms that the promoters are serious about reducing the debt, surviving, and growing ahead.
Okay, let's also look at some buzzing stocks of the day. Waterbase is doing pretty well. In fact, that's been the counter which is actually locked, not exactly locked in upper circuit. It's gaining around 18% in trade at levels of 270. The counter has been going up. Actually, in the last 4 sessions, it surged almost 44%. Let's listen into what the management had to say on the growth prospects going ahead.
I mean, the industry is growing at 12 to 15% every year. So we are very confident that we can achieve a higher growth than the industry growth rate. We are targeting a growth rate of at least 20% going forward. I mean, in this year, we have exported only about 10 to 11 containers, and as I told you, we are not fully focused on that business. We do third parties to utilize this capacity, so there are merchant exporters who use our facility. We are not fully into the processing and export business because currently our focus is on feed and how to grow the feed business, how to fill the capacities. So, and then the focus is also into commissioning hatcheries because we feel that seed quality is of paramount importance, as I mentioned. Processing and export business, we don't have to invest anything. We have the infrastructure right in place. The only thing is we are just building some competencies, and once we have the management bandwidth, we will get full throttle into the processing and export business. But as of now, processing and export business doesn't contribute significantly to us. Almost 96-97% of our revenues come from our feed business.
Wow, that's been some story, these stocks, Waterbase, Apex Frozen Foods, and then Avanti Feeds, not necessarily the same business models, but the kind of gains that these stocks have had. Look at what Waterbase has done over the last, say a month and a half, 2 months or thereabouts. Or this year's chart, for one Waterbase, 2 Apex Frozen, 3 maybe, as I said, Avanti Feeds, and you will see some similarities. There's some spikes that have come into a bunch of these names. I think we should get in Avanti Feeds as well. It's been a phenomenal move for a clutch of these names over the last 12 to 24 odd months. That's Avanti Feeds this year, 420%. So if you indeed realize the potential of this sector and bought into it, if you were lucky or smart enough, and a lot of money that people have made out here. Bala, Chief Market Technician at cashthechaos.com. He does spot some of the opportunities very well, joins us right now on the show. It's an important day of trade, so good to have him. Kiran Jadhav also joins in with his thoughts on what to do in a scenario like this. Gentlemen, good afternoon. Thanks so much for joining in, both of you. We'll talk about some of these shrimp stroke, seafood stroke, feeds companies in a bit as well. But let's start off with the bigger picture, and that's the market. Jay, it's been a very volatile day in its own sweet way. No big swings, but bobbing between the red and the green a number of times in today's session. Clearly showing that the market is a bit nervous ahead of the exit polls today and arguably the election verdict coming on Monday. What would you do if you were indeed a compulsive trader of the index?
Yeah, good question, fair question too. And see, the market is coming into a very important support around 10,150 mark. I think that's the 50%, 61% retracement of the move from 10,034 to 10,330. And if you look at the slightly longer term picture, the drop from 10,490 first it was to 10,090, and then the market pulled back up around 10,400 and then dropped back to 10,034. So that is actually a very important price move. The market is actually sporting a right look for the correction to be in place. But as I said last week, there is a 20% probability. It's just my probability assignment. I'm saying there's a 20% probability that the market might go slightly below the 10,000 mark. But you can't be fearful and try to make money. You got to be brave and stand in front of the market and control your risk. At this point, I will say the market has actually completed the correction from 10,490 to 10,034. So I think the markets are heading for record highs, but with the caveat that there is a small probability that the market could go lower, but you can't help it. If you got to be trying to make money, you got to stand in front of the market and pull your trigger where you see is fit as a low risk entry point.
Kiran, if the result this time around is not in favor of BJP, and there are a lot of technical analysts who are saying then the 10,000 mark could be breached, but what's the ultimate downside that you'll be looking at?
Basically, technically speaking, the market for the last couple of months or a month and a half has been trading in a range. The range is 10,000 on the lower side and say 10,350, 400 on the higher side. Now it is tapering down, and this tapering down is very important for now. The moment we get a breakout above 10,350, we'll see the upside target to be achieved, which is around 10,800, 850 levels very soon. But however, if the 10,000 mark is taken off, which is the lower end of the channel, then we believe that the Nifty is going to test the 9,700 mark, which was the swing bottom registered in September. So these are important levels to watch out for.
As we speak, markets are almost at least the bank Nifty is at day's high, considering today is the day for the weekly options contract to expire. So we've seen bank Nifty turning just after the second half today. 25,100 is the level where it's trading, and clearly the financials, the banking stocks are contributing to the gains we are seeing on Nifty, which is now trading firmly above the mark of 10,200. Jay, what would be your top trading ideas?
Yeah, there's an interesting play that's happening in the mid-cap space. Interesting stock is the Daiichi Kirkare. The stock was a darling between 2012 and 2016. It went from 30 to 625. So that has actually been chopping from September 2016 to the current levels where it is. I think it's coming to a very important support, and I think the long-term picture looks like it's got one more highs to come through. I think the stock is likely to hold levels above 300, and I think it's heading for record highs beyond what it made in 2016. I think that's a very important investment bet for people who likes these stocks, and so this is entering a very important strong price territory. Look out for this to be an outperformer in the next few months.
Wow, not the most liquid stock, but well, Jay Bala likes it. And we'll talk to Jay about some of the liquid stocks as named, but Daiichi Kirkare, I haven't heard about this stock for a really long time. So that turns out to be a very interesting stock recommendation. Kiran, if I'm not wrong, you haven't shared your ideas, specific ideas. If you have them, can you share your stock specific ideas for the afternoon?
Yes, absolutely. In the mid-cap space, we believe Uflex is one stock which needs attention. We believe that this counter is given a positive diversion on the charts, and with this a move above 480, presently trading at around 470, but a move above 480 will trigger a breakout of an ascending triangle pattern, after which the target that we see in the next couple of months would be around 650, 700 kind of levels. So that's the kind of upside that we will get after a breakout. We are just 8-9 rupees below the breakout level. And in case the breakout happens, we believe that the stop loss should be placed at around the 460. So risk of 20 rupees and a reward of almost 200-250 rupees is a good risk to reward profile. And either ways, this counter has been outperforming very well in the last couple of years, with the price moving from 140 to 480 kind of levels.
Okay, Uflex from Kiran Jadhav's end. I was just, I'm just intrigued with Jay Bala's call. So before I get to stock of the day, I'm just looking at the stock price of this stock called Daiichi Kirkare. Here are some statistics, by the way. A year ago, the stock was priced at about 500. It is now 350, and which is why I think Jay was talking about how it's hitting some key support levels. Market cap is about 250 crores, so it's a tiny tune. The daily traded volumes on an average are about 7,000 shares, so it's not the most liquid name as well. How did this fall into your lap, Jay? I mean, what made you take notice of Daiichi Kirkare?
No, I have a lot of traders who make very interesting bets on the market, and since I'm a trend follower, I usually wait for the trend to take control of the market. So I take the point that the illiquidity of the stock, it was the same story several months back, or maybe even a year back, and then the stock was performing and went into an explosive move. And we track markets when it comes to traction within the trading circle, and so we also follow technicals very closely, and that's the only reason by which we pick stocks. So if you were to get slightly technical, the blow off to 625 is it's what we call a middle of a third wave move, and when this correction is what we call a fourth wave correction. So what the market is saying under the Elliott wave model, if my interpretation is correct, it's got the final leg of the uptrend to continue, so that the stock goes above the record highs.
I think the stock came under pressure because FY17 in terms of numbers was not so good for the company. Their profits fell almost 27% to 16 versus 22 crore, which was seen in FY16. Okay, but a good stock. I don't think we talk about it every day, but Daiichi Kirkare is the top pick by Jay today. But let's also look at a couple of other stocks. IRB Infra is the one which is actually buzzing in trade. That's trading almost at day's high, and if I'm not mistaken, it's also in the F&O band for the day. 208, Kiran, on the charts. So how is it looking?
Could you just repeat the stock for me, please?
IRB Infra.
Okay. IRB basically it's giving a pullback rally from the supports. A very good strong support has been seen at around the 195 levels. Currently, if you look at the intraday charts from 200 sudden spurt in price and volume, which basically tells us that some kind of demand is being seen. And with some announcements that I heard about a couple of hours back on the infrastructure space, we believe that there is potential for the stock to go to around 225. Stop loss suggested here would be around the 199 mark. So take an 8-9 rupees risk and rewards of around 15 rupees from here on.
Okay. Okay, thanks a lot for that, Kiran. Now, the stock of the day, before we get to our fundamental guest, he's the head of research at Ventura Securities. Vinit Bolinjkar joins us on the show. But before I get to him, I have to mention the stock of the day, which is 1% beverages. The stock has gained the most in last 3 months after the Reserve Bank increased the FII investment limit in the stock to 49% from the earlier limit of 24%. It's gained for the second straight day, has gained 11% during the interim, but it's not had the best year. If you pull up what the stock has done over the last 12 months, 3 months, 6 months, there is a tick of red across in 1%, just starting to inch up a little bit in today's trade. Well, very interesting. I confess incomplete knowledge about what the company's current financials look like. Remember, it's a stock that used to do really well. They launched a clutch of products. They also try to target the Maharashtra and the Mumbai market, taking on some very strong players as well. And in between got caught in some report issues as well. Somebody reported about how the numbers don't seem on board, etc., etc. But it's been an interesting one for 1% the last 12 odd months, not the best ones. Let's see if this changes. Vinit Bolinjkar, head of equity research at Ventura Securities, joins us right now on the show. We need so much more to speak about with you. Thanks so much for taking the time out and joining us today. But before we get to the markets and strategies thereof, just wondering, do you have any thoughts on 1% beverages? Do you have it under your coverage?
Yeah, we have a coverage on that, and we are quite bullish given the fact that the cola space is being replaced by the food drinks market, which is growing at a very brisk growth rate. And I believe that this company is best positioned to garner market share and grow in that segment. So we continue to like that stock.
Sorry, did I hear you correctly? You continue to like 1% beverages?
Yes, that's what I said.
Okay, you do continue to like 1% beverages. Okay, Vinit, what are you telling clients to do by and large? Are you getting your key clients to lighten up positions or buy some protection? Or is it business as usual today?
So it's business as usual today. I think that at the central level, the government is very much in place. And our bets with our analysis suggest that the BJP should win. However, there is a slim chance that the vote of anti-incumbency could come in. So the best way to play this kind of market on a very short-term basis is to buy a little bit of protection on the downside, because if the Congress party were to win, then there would be a galvanizing and resurgence of the opposition, and the invincibility of the Modi government would come into question. So, as a common sense strategy, we believe that one should purely hedge yourself in the market with a few derivative strategies that will protect your portfolio.
Okay, so that's the view coming in on the markets. If somebody is taken a long position in a volatile market like this, hedge yourself on the downside. Well, there are some important flashes there on your screen with regard to Vodafone case. Supreme Court says arbitrators can be appointed in the second arbitration case, and they also say arbitration proceedings won't start before January 10. The Delhi High Court to hear Centre's objection in the second arbitration case on Jan 8th, 9th and as well as January 10th. So those are a couple of important flashes there on your screen with regard to that Vodafone case. But going back to the markets, Vinit, what's the view on the realty sector? Because if I look at the Nifty Realty Index, that's clearly outperformed for 2017. Do you see the outperformance continuing in 2018? If yes, which are the stocks that you like in this sector?
So I think we discussed this just a couple of days back. And I think the second rung of stocks, specifically those which are based in the market of Bangalore, seem to be good picks. Shobha, Brigade, Prestige. These are the stocks that I like. And in the large caps, I continue to like Godrej Properties for a pan-India play. And if you're looking to invest in the market from a 3 to 5 year perspective, I think DLF becomes a cheap stock to buy.
Just stay on, Vinit. So much more, and we'll talk about the details and the rationale behind this as well. But as Navneet said, this flashes on your screen. The Supreme Court has also rejected the government's plea against Vodafone International Arbitration, has granted some time as well, as we just spoke about. But what's the meaning of all of this? Arpan Chaturvedi joins in with a quick perspective here. Arpan, what does this mean for Vodafone?
Well, basically, simply put, this matter relates to the second arbitration case which had been initiated in the Vodafone retrospective taxation case. In Supreme Court, what the case was that the Delhi High Court in an earlier order had asked both the parties to go ahead with the process of appointment of arbitrators for the second arbitration case, against which the centre had come to the Supreme Court. In its order, the Supreme Court basically said that the appointment of the arbitrators can go ahead, but the arbitral proceedings in the second arbitration case won't start before January 10. Now, why January 10 is because the Delhi High Court is in the process of hearing the centre's objection to the second arbitration case. The dates for that is 8th, 9th, and 10th January, and that is why the centre had been seeking that the process of appointment of arbitrators or the arbitration proceedings should not start before the Delhi High Court decides on that. So yes, partial relief in a sense for the centre that the arbitral proceedings now will not start till Jan 10. But the process of appointment of arbitrators, that will definitely go ahead as per the Supreme Court's order.
All right, Arpan, thanks a lot for bringing in all those important details with regard to that Vodafone case. Well, switching back to markets, Nifty is at about 10,211 and Bank Nifty is also trading with gains of almost 0.5%. Let's move on and talk about the buzzing stock of the day, and I guess Nikki Mirchandani is tracking Atlanta. Nikki, over to you. Take us through the details.
Hi Navneet. So the counter is buzzing in trade and it's now as much as 15.5% today, which is its highest intraday gain that we've seen since September 2016. Now the volumes remain high at 4.6 times, fairly moderate I'd say, at 4.6 times at its 20-day average volumes on NSE. It's a good show in terms of Q2 for the company. If you look at the revenue, that's the top line figure, that's almost risen 32.4% in this quarter on year-on-year basis at a number of around 51 odd crore. Healthy profit, healthy performance coming in even on operating front for that matter. It's risen as much as 52% as compared to a number of 35 crore as compared to 23 crore seen in the corresponding quarter. Margins have expanded to 69% from 60% in the base quarter. Profit has risen 67% on year-on-year basis for this company. What has led to a good set of numbers will be a decline in the raw material cost, that as a percent to your net sales has come down, which has led to cost efficiency for the company. This combined with your higher revenue has led to good set of profits coming in for the company, and the margins have risen on back of this development. Also, you're seeing lower finance costs and depreciation, which is aiding the bottom line performance of the company. Now, finance cost has come down by as much as 17% on year-on-year basis, while depreciation too has declined by 20% on year-on-year basis. A quick rundown of what the company is. It's an infra development company which has a market capitalization of around 900 odd crore.
Thanks so much for that, Nikki. That's Atlanta for you, up about 12% in trade. You know, the last few days, a number of times when we've been doing the market open, when Ventura, some of the stocks that Ventura Securities has initiated a buy call on have actually had a fairly decent reaction, and which is why I was wanting to speak to Vinit about some of these. But I remember a few days ago, it was on solar industries wherein it come out with a buy call and the stock had reacted reasonably well. In today's session too, I think I saw one brokerage note on which Ventura had a buy call and the stock did reasonably okay. Why solar industries, Vinit? It's a stock which is probably not the most liquid. Two, the capacity utilization in one of its business arms isn't exactly at its best, the defense business in particular. Why do you think that there could be sustainable earnings flow for solar?
So, you have to understand the business of explosives. It's a very regulated business, and solar has been miles ahead of competition in getting all the orders. Another thing, you have to understand the size of solar. If you compare the other players, which are Gulf, there is Premier Explosive, they're very small compared to solar industries. Another thing that we have to understand is that, with the country growing so rapidly, where Coal India is talking of doubling its turnover, infrastructure has got such a big push. defense has been, we have a new policy in place where defense procurement is also done from the private sector. So all these segments are really opening up, and the company over the last 10 years, be it any government, be it the UPA or the BJP government, has grown at a unbelievable 25% CAGR. That is very impressive, both top line as well as bottom line. And I expect that the best is yet to come. So you have coal segment looking very good. Coal's outlook is, Coal India is looking to double production in the next 3 years. Infrastructure, we've had such a big bang reform put in place. Exports are growing. And the defense vertical, where they've done only 10 crores of business, as you said, it's not very impressive, is the fact that they just started last year. And this year we are looking at them doing about 80 crores. And by 2020, they really they're looking at picking it up to, 500 crores. So that's a huge growth that is coming in. Apart from that, they're setting up operations in 10 geographies across the globe. So with all these movements coming in, I believe that although we have seen a great run for the stock, the best is also yet to come. So we are seeing EPS go up to 40 rupees in 2020. That is my prediction. That is our forecast actually. And it's about 25x on that, 25, 26x. So I think there's substantial upside remaining. The stock will continue to be highly rated. The expensive valuations will continue to remain rich. And considering the business and the outlook that is there, and it's got a good moat around it, so we are quite optimistic about that stock.
Vinit, besides solar, you guys have also initiated coverage on Everest Industries and got a target price of 712. And the report also says that you guys expect the company to turn net cash positive by FY20. Could you take us through the rationale on your bullish call on Everest Industries?
So, I would like to digress a bit and take you to the fundamentals of the building products industry. So with sand and water becoming scarcity and the need for quicker, faster implementation of projects, these fiber boards, asbestos sheets, roofing materials are kind of getting to become very, very important, and they are also expanding through contiguous spaces. So, the fiber boards can replace your walls, they can replace your ceilings, they can replace wooden ply because of all its characteristics. And the company has also got a lot of spare capacity which has not been operationalized yet. Actually, that is the spare capacity which they had put up in the Middle East, and after the Middle East slowed down, they bought the plant and equipment to India. And they are looking to set it up at a strategic place. So having said that their capacity utilization is looking like peaking, that is not the case, because when this new plant comes in, new revenue streams will start flowing through. So given this kind of outlook on the space, all the stocks, you talk of Everest, you talk of Visakha, Hyderabad Industries, Ramco, Sahyadri, NCL, they are all in a sweet spot and should outperform the market.
Well, a couple of your pharma stocks are doing well. Pula Wokha, that's trading higher, 4.5% gain seen there. Natco Pharma is also doing pretty well. Jay, any of the pharma stocks that are looking good to you? We just had a recent report by one of the brokerages. I guess Nomura stated that the FI holding in a couple of the nifty pharma stocks have been falling in the last few quarters. Is there anything in the pharma space that you like?
I see the pharma stocks as just a relief rally rather than a change of trend. If you got to be in the pharma space, I think it's got to be Cadila Healthcare rather than anything else. I see the stock coming to a very strong support. It's much stronger than any of the frontline names, and if it were to hold somewhere about 375, 380, I think if the pharma sector is probably going to prove me wrong and it's going to go to record highs, I think this is the first stock that will hit the record highs past 550 to 575. So focus on Cadila if you got to be on pharma. Otherwise, it's an avoid for me.
Okay, that's the view on the pharma space, but let's also talk about the Fab 4 stocks of today. And as usual, to take us through the same, Yash Upadhyay joins us. Yash, over to you.
Good afternoon, Navneet. So, Oberoi Realty makes it to our Fab 4 list today, and the stock is up almost 4.5%, 4% after Motilal Oswal came out with a note initiating coverage on the stock. Now, they have assigned a buy rating and have set a target price of rupees 580, which roughly translates into a potential gain of almost 28% from its previous day's close. So, good news for this one. Religare Enterprises is another name on our radar, and the stock is locked in a 5% upper circuit today after a little over 1 crore shares exchanged hands, or almost 6% of the total equity exchanged hands via multiple block deals. We'll be keeping you posted about who the buyers and sellers are once the exchanges update the data post-market hours. Also, we have Pratap Snacks. Now, this one is up almost 4% after coming out with a spectacular set of Q2 numbers. EBITDA and net profit both rose more than 140% on a year-on-year basis, while margins also more than doubled on a year-on-year basis. And lastly, Sandur Manganese is another name on our radar, and the stock is up about 4.5% after the Karnataka government raised the cap on iron ore mining from 3 million tons per annum to 3.5 million tons.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks off the day. I'm just going to take Oberoi Realty from that Fab 4 list. Kiran, on the charts, it's one of the top gainers on the Nifty Realty Index as well. How does it look? Do you expect more upside for Oberoi Realty?
Yes, Navneet, we believe that this counter has a capacity to and has a good headroom from current levels. And the next resistance as such is the psychological level of 500. And once this level is crossed, the kind of consolidation that we are seeing, we believe that this counter is going to actually outperform. The probability of this stock going to a level of say around 600 is not ruled out. And for that, stop loss of around 460 is suggested.
Jay, what's the view on the oil marketing companies? We've seen volatility coming by because of the crude oil prices in the recent past, but today all three, HPCL, IOC, BPCL, all of them are trading in the green. Would you recommend buying any of these oil marketing companies at these levels?
I'm glad that you brought that question. You know, I think Brent is likely to see another maximum of $1 decline, and after that, it's going to be a very strong up move. I think this is the last opportunity to get out of downstream oil companies like HPCL and BPCL, and probably even, you know, we spoke about Jet Airways some time ago. I think if what my reading of medium to long-term picture of Jet is, I think that's going to see a very sharp decline, somewhere close to even 450. You know, if that is under the assumption that my interpretation of the charts of Brent is right, I think Brent is heading for 80 to 85. I've been saying this for the last 3-4 times, and so watch out for this. All these names are heading into important resistances, and this is probably a last opportunity for people to get out of these names.
When do you expect the Brent crude prices to touch that level of 80-85, which you just mentioned?
It's a medium-term call. I think it'll be there in the next 2 quarters. But the trend will start pretty soon. It could start as early as next week, or even if you had to drop today to somewhere close to $1 below yesterday's low. I think Brent is heading to a very strong support. The Brent's move beyond 65 and then reversal was just a sign of what's likely to come. I think it will take out 65, and people will see the breakout beyond that, and it will start heading much faster than what it's been acting the last few weeks.
We'll watch out for this. I think the last few times that we've chatted, Bala has been consistently bringing up this point that he's bullish on crude and therefore bearish on some and not all of the crude derivative plays as well. Let's wait and watch what happens to both crude as well as some of these companies. I'm looking at some interesting names. So one of them is Zen Technologies. And it's not just today's move which takes the stock to new highs, but what the company's done over the last few days. Almost every alternate day have seen Zen Technologies appear in the list of the top gainers and hitting new highs. And the last 3 months data Yeah, the 1 month data, 55%. The 3 month data too would probably saw similar gain, if not more, 115%. So it's almost gained 50% apiece each of the last 3 months. That's substantial gains. Confess ignorance again to what this company does. I think it's a defense company, but maybe just maybe our fundamental guest would know a thing or two about Zen Tech. I mean, solar has got an arm of defense within it. This one is slightly different than that. But Vinit, any thoughts whatsoever? Ever heard of Zen or the business that it does?
Yeah, so I think it's a very dynamic business. It's a small cap company doing about 60 crores of revenue. Recently, they won orders close to about 200 odd crores, which is a fresh government order. And just for the brief of your guests, of your listeners, what I would say is that it's a simulation software company, and they're doing a lot of interesting things in the defense space. And they have got an export order also. And they make simulation software for T-90 and T-72 battle tanks. I expect that this order book which they have got is the cumulative order book is about 300 to 350 crores. And a large part of it would be executed in FY19. And the business margins are extremely high. In fact, we expect the PAT margins could be anywhere upwards of 30%. So while we have met the management, we don't have an active coverage on the company, and but it's a very interesting space and a very fast-growing company with a very bright future.
Well, the other stock which has been quite active, especially this week when the markets were volatile from the broader market space, was Kokyo Camlin. That's up almost 20% for the week. Remember, on one of the days it was also locked in upper circuit, and today it's trading with gains of almost 8%. Vinit, do you guys track this one?
I'm sorry, we don't track that stock, please.
Okay, not a problem, but let's just get a technical view on this. Kiran, on the charts, how does it look? Because on year-to-date basis, I was just checking the returns, it's up almost 85%.
Yes, it gave a breakout of its consolidation phase a couple of days back, and it continues to move up. We believe that the technical target for this counter is around 175, 180 levels. But this is the first target. The company, the kind of chart pattern that the stock has done, the chart structure is pretty positive, and we believe that if anyone is holding on to the stock, those investors should really make use of these trading stop losses. For now, the trading stop loss level is 136. Hold on to this. First target 175. As this target is reached, we should increase that trailing stop loss.
The bigger story is playing out in the large caps and the markets at large. Just bring up what the Nifty 50 is doing, the Bank Nifty is doing as well, 132 points. I must confess, I thought that we would enter the close of today's trade very, very flat. If the last 15 minutes or 30 minutes are anything to go by, the market seems to be in a different mood. There's a bit of a spike upwards, and it's just 24 minutes of trade left, but we are heading into this close very, very strong. Now the Nifty Bank, could well have some moves got to do with the weekly expiry as well, and maybe that is leading the index higher. But one would have thought that we would be hitting this close in a slightly muted fashion. That isn't quite happening. We are at the highest point of the day, I would presume, for both the Nifty 50 and the Nifty Bank. And there is strength across the board, because if you look at the Nifty 50 gainers as well, HPCL is leading the pack, but it's not restricted to one sector. There is Dr. Reddy's amongst the gainers, Tech Mahindra is amongst the gainers, ITC is amongst the gainers. So auto, pharma, technology, oil marketing companies, the clutch of these names are doing rather well across the board. I think auto, so M&M, Hero Honda and a couple of others are doing rather well for themselves too. And the big boy HDFC Bank seems to be participating. It's back to 1837 or 1850 odd levels. So that's quite a bit of a pullback from the recent lows that HDFC Bank has had. I don't know if this move is also changing the mid cap and the small cap end of the spectrum. Just bring up what's happening to the BSE mid cap and the BSE small cap indices too. I think there is some strength that we're seeing out there as well. Jeb, may be a difficult call, but the Bank Nifty or the HDFC Bank? I would presume that it is the weekly expiry that's got to do with this, but would you carry home some positions into these stocks as they are ending the session or looking like ending the session fairly strong?
Yeah, if you look at, I wouldn't probably actually carry HDFC Bank. I would actually carry Axis Bank. The stock has been holding pretty well, during this fall, and it's been, very close to the 52-week high of 565. Now, once that takes out, it's got a lot of catch-up to do, compared to its banking sector peers. It's I think a record high of close to 650 is pending for the stock. So I'm just waiting for a breakout to go beyond 565. I think it's just a matter of time. But if you're being a bit more conservative, wait for the breakout to happen above 565. I think it'll be a brisk move once it crosses that level. So so if you're a bit more brave, you can definitely carry Axis Bank home for an overnight position.
Okay, so you can carry over Axis Bank. Well, in a volatile market like this, where Nifty was down almost 100 points from day's high yesterday, today it's recovered almost 90 points from day's low. So that's some strong recovery that we're seeing for markets. And one of the other large cap stock which is contributing to the gains, I guess, is ITC. Let's just pull up the intraday chart of that one. ITC is at 263 and almost at day's high now. Jay, what's the call on ITC? 263. This counter has not done much this year, and I guess most of the technical guys are saying it's bottomed out around those levels of 250 or 255. Do you see further up move for this one?
No, I see this as just a short-term rally rather than something of a more prolonged nature. So for me, ITC is an avoid. I've always favored HUL over ITC, and I continue to maintain that. And if you're, there's an important thing that's happening. There are some very important signals coming from Nifty PSC index. Names like Coal India, Engineers India. They're all putting some strong resistance, and it looked like they're turning. So probably that's an indication of what the market sense of what is likely to happen from the Gujarat elections. But I can only interpret charts. I can't really say what's actually going to happen tomorrow from the exit polls or the actually counting happens. So look out for names like Engineers India and Coal India. I think they are looking quite strong and heading to very strong support. If you are looking for a play for the December expiry, I think Engineers India is likely to hit somewhere close to 210. If you are a little more patient, maybe by the January expiry, you can look at something close to 230 to 250.
Okay, Jay, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. If we still have Vinit with us, we just want to take his final question with him before we let him go as well. Vinit, before we let you go, I know you've spoken about 3 or 4 small cap names as well. Any small cap or mid cap business which has looked really interesting to you? I mean, you may not necessarily have the most bullish view there, but the business looks fairly interesting, and if not now, then over the course of the next 3, 4, 5 years, it may have the potential to become really big.
So I think that infra stocks, especially the ones which are providing services to builders, the EPC contractors, Capacite, I don't know how to pronounce it, is one stock which is looking really, really interesting. A lot of builders have promoted faith in the management. They're building the Trump Tower. The Lodas have given them business, and they've got business virtually from every big name in the real estate world. So I think that company looks to be going places. And over and above all, I think just like the building materials industry is in a sweet spot over the next few years, I think infra is going to be the theme for 2018.
Okay. Fair call. We'll watch out for this. Thanks a lot for that, Vinit. Really nice having you today. Look forward to have you more often on this forum. That's the view from Ventura Securities and some interesting stock recommendations there as well. Before we get in our next special guest, Mayuresh Joshi, let's just ask Navneet Saluja about what is happening within the derivative space. Very interesting day today. what could enter the ban, what could come out of it?
Well, the market seems to have recovered, but India VIX is still trading in the positive territory. So that's been the cause of concern. But with regard to which stocks can enter into the F&O ban tomorrow, or rather which can come out, I'm just going to start off with the stocks which are close to going into the ban period. Dewan Housing is one of them. If you look at the overall open interest in the futures and options market as a percentage of market-wide position limit yesterday was very, very close to the borderline limit of 95%. And I've seen long open interest build up for both futures as well as option strikes. So watch out for that one. TV18 is the other one. So that's also seen some open interest build up coming about. DLF, last when I checked, it had reached that level of 91%. I'm not very sure that it is going to enter or not, but it's definitely very, very close to that limit of 95%. GMR Infra is the other stock which has seen lot of build up on the future side as well as on the option side. But two stocks which may just come out of the F&O ban, and one of them is doing pretty well today. That's IRB Infra. That's up almost 6 to 7% last when I checked. So watch out for this one. Then Jet Airways could too come out of the F&O ban. And for any stock to come out of the F&O ban, it has to breach that limit of almost 80%. And these two stocks are pretty close to that.
Okay, let's see. Let's wait and watch. Remember, when Jet Airways went into the ban, we told you about it a day earlier. Let's watch out if indeed Jet Airways comes out of the F&O ban as well. It'll be an interesting one to watch tomorrow. However, before we get in what dealing rooms are recommending in the session today, let's get in Mayuresh Joshi, fund manager at Angel Broking, who joins us on the show. Mayuresh, every conversation today in the last 15 minutes has to be with regards to what could happen in trade in a very, very short term as well. Must say the markets are heading into the exit polls fairly strong.
Well, they are, and I think a basic premise, Neeraj, for the markets is obviously a BJP win, but the quantum of the win also will probably matter for the markets from an immediate short-term perspective. So yes, I think to that extent, the probability built in is a BJP win with a reasonable margin win. But if that margin win in terms of the number of seats that it gets is far lesser than what the seat expects, you might have some incremental knee-jerk reaction on the downside for the markets. And the markets have probably not factored in the worst probably happening in terms of election results. So yes, I think it's going to be a binary outcome over the next 2 days. But largely after the event is over, my own sense is the markets will come back and then probably start looking at the macro factors, which are very, very critical and essential for the longer term health and nature of the markets to probably sustain themselves in terms of valuations.
Okay. What have you been doing? Have you been you're taking some chips off the table, Mayuresh, or no, nothing like that? It's business as usual?
No, I mean, nothing in that sense, I think. I think we're just waiting and watching in what sense the markets might react over the next few days. But largely, again, I think nothing, no profit booking at my end. We are probably looking at qualitative stocks as always. And if the market does give us a correction over the next few days, I think we'll be more than happy to go and buy these in the falling market.
Okay. Still, Mayuresh, so much more to talk about, but it's 3:15. Let's get a sense of what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Well, Neeraj, a couple of stocks which are interesting. Of course, Darshan will talk about some oil marketing names, but Wokhart, that is one stock which is quite active as far as the future and option segment is concerned, and dealers are indicating that domestic funds have been accumulating the stock in the pharma space. So watch out for this one. Volumes are also nice. Almost 40 lakh shares traded as far as the cash markets are concerned. Apart from it, in the future and option segment, Fortis Healthcare is also something wherein dealers are expecting a short-term 10 to 15% upside. Of course, the stock keeps on, going in ban, coming out of ban. So a lot of speculation as far as this counter is concerned. But if you look at the group companies, Religare and Fortis, both of these stocks have been quite active in terms of price and volume action for the last 7-8 days. So Fortis, after a correction, some bit of bounce back is what dealers are anticipating. And finally, in the cash market, Indocount is something wherein HNIs are doing some delivery based selling. Of course, the stock is also in the future and option segment. but some selective profit taking and selling at higher levels in the cash market is observed as far as this counter is concerned. But Darshan has a few more stocks to
Yeah, so oil marketing companies, if you look at them, most of them have rallied today. Indian Oil is up 2%, HPCL has moved up 3.5%. Now, what Hasib Drabu, he's the JNK finance minister, he said that there is a high possibility and likely that petroleum products will probably come into the GST. Whether that will happen or no, I don't know. But that certainly has got the street excited, and there is accumulation. And if that does happen, it's positive for the oil marketing companies. So the oil marketing companies, yes. Godfrey Phillips, again, is buzzing in trade news coming in that there's a possible hike as far as some of the cigarette prices are concerned, especially in their flagship Marlboro brand. So that's something that is keeping the stock abuzz. And even ITC is moving up on that news that there could be a potential cigarette price hike that could come in. The final stock that's been spoken about is CSE. The company has had a very good rally over the past few months. Some of the domestic mutual funds are actively booking some bit of profit onto the counter, and that is why there is sell pressure in the stock today.
Okay, we'll watch out for all of these names nearing 1,000 mark now. CSC, thanks a lot for that, Darshan, as well as Yatin. Okay, there are some queries, and we also have requested Kiran Jadhav to give us some hedging strategies as well. So we'll talk about all of those, but need to mark the markets. Now the Nifty Bank is up 180 points, 0.75% in the green. Nifty 50, 68 points. If this is not entering into the exit poll strong, then I don't know what is. Again, this could well be a factor of what's happening to the Nifty Bank on the weekly expiry as well. But there's a very strong, buoyant performance by the Nifty 50 in the last 45 minutes to 1 hour of trade. Certainly not entering into this daylight, but let's wait and watch. There was a bit of a correction, remember, that happened yesterday as well. Day before, not too much short positions, but a correction that happened yesterday and the day before. Is this mean reversion? Remains to be seen. The couple of queries that I was talking about before we ask Kiran for his hedging strategies are on Coal India as well as Religare. Mayuresh, any thoughts here? One of our viewers is asking about please suggesting a future for Coal India. The other guest is asking about what should he do with his investments in Religare. Do you have thoughts on either of these two names?
So Coal India, Neeraj, has clearly struggled in terms of pricing, not able to probably match what the street expectations were. So both the e-auction realizations as well as the FSA realizations have still lagged. And there is still some hope in terms of certain grades of coal probably getting upped over the next few quarters. What we probably saw in terms of dispatches, in the number of rakes that Coal India probably dispatched, the offtake would be far better in Q3. And again, I think the impact of employee costs on their balance sheet, which they have largely accounted for and will account for, will largely happen over the next few quarters as well. So if it's a genuine long-term investors with a good dividend yield, although there are still some questions in terms of dividend yield actually coming down, he can definitely hold on. Religare, again, I think do not track that counter very closely, but an alternate stock that I probably like on declines is Century Ply. And again, the kind of share gains that this company can gain from the unorganized sector, the capacity increase that is happening on the plywood end, on the laminate end, will augur well for the leverage on their balance sheet. And the realization growth will ensure that the earnings uptick over the next few quarters will continue for the company.
Okay, 3:20, that time of the show, we're going to get in closing strategies, and we'll also request Kiran Jadhav, as I said, for a hedging strategy. But Kiran, firstly, not talking about the hedge, but a pure play trade, a BTST or STBT that you may have.
Yeah, for BTST, we believe that Natco Pharma is doing good, and we believe that from here we could see a good amount of upside, because it has broken past the psychological level of 1,000. At the same time, the 1,000 was a technical level as well. It was a recent high that it registered in the month of October. It has done with huge volumes, and we believe that this counter has a capacity to go to around 1100, 1130 levels in a couple of days. And for that, stop loss is quite near. It is around 1005. So stop loss 1005, target 1100, 1130.
Okay. What about your hedging strategy for some now? Again, it may have changed because the market has really given a bit of a thumbs up in the last 45 minutes to 1 hour of trade, Kiran. But for somebody who wants to hedge his positions ahead of what could turn out to be a market-moving exit poll or a market-moving election verdict. What should he or she do?
Basically, there are certain criteria that we need to consider. First is the portfolio size. If the portfolio size is, say, 1 crore, then technically what happens is a crucial support exists at around 10,000. So I would want to buy a put of strike rate 10,000, which was trading at around 82, which will now be trading at around 62 odd levels, which will basically reduce his investment as well. So earlier the investment was around 95,000. Now it would have come down to around 88,000 or so. If the 10,000 technical level is violated, we believe, as I earlier said, the target would be somewhere around the 9,700 mark. So we'll see a 300-point fall, and if this fall happens, the investor will get around 3 lakhs profit on this trade. So what really happens is the portfolio depreciates by around 3%, and which amounts to a loss of 3 lakhs, and this 3 lakhs is compensated by this put. In case the stock market moves up and we get a positive outlook on the market, then we are hedged properly, because on the higher side we believe that the market would rally to around 10,800 plus levels. So which means this small risk of around say around 0.6% or 0.7% of the portfolio value is well paid for.
Okay, that's the hedging strategy. And Neeraj, earlier during the day, we were also asking Ashish on his view in a market like this. He said if the Gujarat election results, they go in favor of BJP, the markets could actually rally to 10,700. And Kiran also highlighted 10,800 could be a level to be watched on the upside. So let's see whether this time around, at least for 2017, we can reach that mark of 10,500 or not. Mayuresh, I want to just take your view on the oil marketing companies. Darshan's dealing room check suggested that petroleum products may come under the ambit of GST. What does that mean for the oil marketing companies or the upstream companies?
Again, it's incrementally positive if it does happen, and it does incrementally add to earnings in a substantial manner over the next few years. Secondly, from an OMC point of view, I think where crude prices stabilize is going to be extremely critical. If one assumes crude to stay between a range of $60 to $67, $68 to a barrel, it remains extremely lucrative for them, both in terms of reported numbers as well as expected earnings to come through, because the incremental capacities that these companies are putting is with higher Nelson complexities, which means that the refining margins will be far better over the next few years, and the operating cash flows also remain far more stable. Add to that, I think the marketing margin impact is also very, very reasonable, considering that there is still further scope, both in terms of diesel and petrol margins to go up. So yes, I think the whole recommendation continues for OMCs. IOC is something that I've liked, continue to prefer within the OMC pack. So large part of that whole recommendation continues. In the mid-strap companies, GAIL probably has shown a stellar performance, and if you look at the kind of expectations in terms of more gas output, in terms of their petrochemical business doing well, the LPG segment also incrementally adding to the EBITDA, and again expectations of unified tariff actually working in favor of that company, with the assumptions of no sharing happening with crude staying in this range, I think it does benefit GAIL as well. For upstream, again, I think it's a direct pass-through in terms of crude prices onto their bottom line. But a large element has to be a substantial move on crude prices. But then that also risks the factor of some sharing happening for the downstream part as well. So I think downstream hold continues, GAIL hold stream continues. IOC is something that we remain positive about within the downstream.
Strong close. We actually ending at the highest point of the day and not showing any signs of buckling down. Navneet, really, I'm just looking at the list of gainers, and it's across the board. There aren't, except for TCS, in fact, which is the solitary loser, there aren't too many losers on the Nifty 50, and the Nifty 100 too has TCS and Britannia as the two losers. Aside of that, there aren't too many stocks which are correcting in a big way. It seems to be quite a bit of buying. I don't know about the cash market really. The volume should come up on your screen because the cash market volumes were very, very thin. I would presume the cash market volumes would still have been thin. Yeah, I mean, the NSE cash slightly lower than what we are usually used to. And the FNO obviously because of the weekly expiry high. but yeah, the cash market volume slightly lower, but not too many losers.
No, Neeraj, but still the VIX has cooled off from day's high, but it's still in the positive territory. If you could just pull up the India VIX and also just look at the options data. VIX is still trading, mind you, with gains of 2.5%, and it has an inverse relationship with the market, but that's not been the case at least for this week. The call writing is still continued on 10,200, 300. Out of the money call strikes have seen some writing, and it is the 10,000 strike which even Kiran suggested that if somebody wants to hedge their long positions, probably they can look to buy that strike. So that's the strike which is sitting with maximum open interest, and that's a very, very crucial support for our markets, at least if you go by the options data. Last time when Nifty slipped towards those levels, it took a reversal from that 10,033 or 34 odd levels. Let's see if this time around the move will be on the upside or on the downside. But for the time being, it looks like, Neeraj, we're going to be closing at day's high.
Almost seems to be that case. Navneet, if I can just ask you a question though, if you can pull out maybe the 10,000 Nifty put or the 1900 put and see if those strikes have actually gained in price today, because the last 3 days these put prices have doubled, more than doubled actually, and I don't know if there is some bit of buying that has happened even in today's session thereof.
We can see the writing on the 9,900 put strike, that's added 5 lakh shares. But as I was mentioning, the 10,000 strike, which is a crucial support, sitting with maximum open interest, almost 96 lakhs, that's added 11 lakh shares. But the premium definitely, Neeraj, because it was going up in the last 2 to 3 trading session. Today we've seen a cool off, considering Nifty is trading almost with gains of 70 to 73 points. But the quantum of increase and the quantum of the magnitude of decrease that you see in the premium, it's not going well, so it's not decreased so much as also.
Okay, fair call. Thanks for that, Navneet. Okay, quick check here on what the large caps have done. About 181 points for the Nifty Bank. That's the standout, quite frankly. Nifty and Sensex moving at par, and the mid caps and the small caps too, I think, have a shade of green out there. So the market breadth would be positive. Small cap not so much, but the mid caps are flat. So it seems to be a rally in the last 1 hour, which is led by banks and large cap names, not so much at the broader end of the spectrum. Here are the Sensex movers, and a fair bit of green out there. We've discussed some of these names. Dr. Reddy's, Cipla, and Lupin are amongst the pharma players. Reliance is giving a bit of support. HDFC Bank and ITC are amongst the stocks that are giving a bit of support as well, and not too many losers. If we take the camera to the bottom end of the screen, you will see that save for TCS, which is right down there aren't enough losers on the Sensex today. What about the broader end of the spectrum, Navneet?
Neeraj, there were a couple of stocks which continue to do well despite of volatile moves that one is seeing this week for the market. So I want to start off with Kokuyu Camlin. That counter has gained nearly 20% for the week, and today also it closed with 5% gains, but towards the end you definitely saw some bit of selling pressure coming about, so closing around those levels of 145. Manpasan was a stock which was in focus after RBI increased the FR limit to 49%. So on back of that news, the counter saw some buying, closing around those levels of 400 finally, 7.5% gains there. Zen Technologies, Neeraj pulled out during the trading session today. That counter has seen good gains. In fact, 134 is the level, almost 8% gains seen for this counter. IRB Infra is the other one. Remember, this could just come out of the F&O ban, and today we did see some good moves towards the second half of the trading session. So 7% gains on IRB Infra. Your couple of pharma counters were quite active. So walk hard among the F&O Securities was one of them, almost closing at day's high at 761, 5.5% gain seen for this one. And Godfrey Phillip, it did come in our dealing room check as well. There is news that cigarette prices may have gone up for this one. Godfrey Phillip closing with gains of 2%. The volumes were actually higher on the cash side for this counter. And corrections seen for stocks like Malu Paper. The paper stocks were going up in the past few sessions, so that closed at day's low with cuts of 9%. Bodil Chemical is the other one which was weak in today's session, and the other one is JK Tyre from the Tyre Pack.
Hey, so Navneet, interesting stats out here. So a couple of things. I think one, we'll pull up the contributors list and show that, save for TCS, no big losers, Navneet. And principally, a set of gainers out there include all the heavyweights. So ITC, the HDFC Twins and Reliance. So that is one. But the heat map is the more interesting bit at the Herod Navneet, especially the Nifty heat map, because you remember when we started the show, it was even Stevens. In an hour and a half, it's essentially the index which has moved so much, and a fair bit of green enveloping the screen. Hardly any red, save for TCS.
That's right. I think the positive takeaway from today's session, Neeraj, would be that it was a broad-based rally. So even if a counter like ITC contributed just about 10 points, so overall, most of the stocks today were in green. Besides the handful, TCS was the one which is also a heavyweight which dragged the index lower. Besides that, I think we can definitely see more of green on the screen.
Yeah, we can. And if we pull up the intradays of the Nifty Bank and the Nifty, it will probably show you the picture that I think the Nifty Bank rallied in the last 1.5 hours, and that's what's propelled the Nifty as well. I think the Nifty would have started moving up from pretty much the same point of time as the Nifty Bank did. If we can just get the Nifty intraday chart as well, it was flattish for most part of the day. There you see, I think the Nifty Bank propelled the Nifty higher. The only question though, Navneet, is that could this be predominantly a result of the Nifty Bank expiry today, and can tomorrow be a different picture? Though you would probably assume that tomorrow's move would be more linked maybe to the exit polls as opposed to what's happening purely to the markets.
But partially yes, because of Bank Nifty weekly options expiry. But one positive takeaway, if I have to take, Bank Nifty is definitely closed above its 50-day moving average. It was somewhere about 25,056, and Nifty too crossed its 50-day moving average. So closing above those important psychological levels may just see a bit of up move. But I don't think we can suggest anything right now. We have to wait for the exit polls, and as we've been suggesting, the volatility still seems to be on the higher side. We had a gap up opening on a lot of days, but India VIX has still been trading in the positive territory. So according to me, that's been the biggest cause of concern for the markets if you have to see any sort of up move from current levels. But also, having said that, India VIX has been going up because of a very, very important event.
Yeah, and add to that, I think the frantic buying in options too. I mean, and that's actually only added to all of this. Let's see, 16.41. That's a sharp move for the last 4 days on the volatility front. Final thoughts from our guests, and Kiran, to you first. It's difficult to give out a trading recommendation, I'm guessing, but nevertheless, your thoughts on the day straight today?
No, the first half was a bit bearish, and that caught a lot of people unawares, and that is what led to this rally in the second half, is what we believe. I don't see a strong buying emerging, fresh buying emerging for now, because technically what has happened is we are still in that range. For the Bank Nifty to get into the bull grip, we need to cross the 25,300 mark. This is what the derivative data suggests. And once this 25,300 is taken off, then we will see higher levels coming, which will be 25,500 and so forth. For now, the technicals just suggest that this is just a pullback rally due to the short covering, which was for the position for the day.
Okay, Kiran, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. Mayuresh, your perspective as well, assuming that it's all status quo and nothing dramatically changes in Gujarat, what would your stance be on the markets? Because elections is just one intermediate short-term event that would impact. What do you do post that?
Also, to a large element, I think you're right, Neeraj, and I think once the actual numbers are out on Monday, the markets will move ahead, and what they'll probably look at, as I said earlier, was how the Q3 results are panning out. And to a large element of the market, the expectations of corporate earnings recovery is something that will re-rate the markets. Couple that up with what is expected out of the budget is going to be extremely critical as well, because a lot of macro factors probably still looking very, very soft. You look at the investment to GDP ratio still languishing at 29%. We've already seen government spending close to 96% in terms of the fiscal targets. We're probably looking at private consumption patterns still remaining a little bit soft. Inflation has inched up. IIP data still looks soft and lumpy. The incremental capital output ratio needs to improve significantly. And for that, I think a lot more measures is what I feel the government will take, both from a budget perspective as well as from a reforms perspective over the next few months. So incrementally, I think I stay very, very positive onto the markets from a medium to long-term perspective, still expecting a strong earnings recovery over the next few quarters. And that is the entire premise for the re-rating of markets. So again, yes, positive on the markets from a medium to long-term perspective. Volatility can very well continue from a short-term perspective.
Okay, so the view doesn't changes on markets. Let's see how the results pan out on Monday. But Mayuresh, thanks a lot for joining us today and giving us your views on the markets. Well, it's time for us to slip into a quick break. Don't go anywhere. We'll be back with more on the other side.
The Gujarat elections is where it all started 5 years ago and where the next 5 years are going to spring from. Get in the loop. Join us at Bloomberg Quint's election coverage. Get the lowdown on everything related to this election. From business to pure politics to the development of human capital. We've got you covered. Elections 2017 on Bloomberg Quint.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Welcome back. You're still watching Countdown with us on Bloomberg Quint. And finally, Nifty snapped the two-day fall. We closed almost at day's high. And remember, Nifty recovered over 90 points from day's low of 10,141. So good move there. Good recovery seen for Bank Nifty as well. Remember, today was the day for the weekly options contract to expire, on back of which there was volatility. As you can see on the intraday chart, there was recovery seen just in the second half of the session for Bank Nifty. The broader markets also recovered from their day's low. So the Nifty mid-cap index just about managed to close in the green, and the small cap index was down almost 0.3%. But it is the India volatility index that we've been talking about since the start of the week. It still continues to be at elevated levels. In fact, in today's session, it also touched the mark of 17. Despite of markets closing in the green, we did not see that slip coming up for India VIX. However, it closed off day's high. So that's the Nifty contribution list on your screen. ITC contributed the most. That's the heavyweight on the index, contributing almost 12 points. Besides that, HDFC Bank, which has almost 10% weightage, contributed 9 points. So as you can see, the contribution from these heavyweights was not so much, indicating that it was a broad-based rally. So that's one positive news. Even Reliance Industries and Infosys closed the day in the green. What dragged the index lower was TCS, which was the biggest loser on Nifty today. That's the total turnover there on your screen because of the Bank Nifty weekly options expiry day. The turnover today was on the higher side, almost 12.7 lakh crore. But look at the cash turnover, that was just about 25,000. If I have to compare it to an average turnover, it was a little bit below that. So that's indicating that investors and traders, both of them, are jittery ahead of that all-important event of Gujarat election result. Today's the day. In the evening, you'll get the exit poll, and final results will come out on Monday. Let's switch focus and talk about the European markets. So Europe European markets are cautious but trade within the negative bias ahead of the ECB decision on interest rates. So we've got Sebastian Salek, who's joining us from London with more on that. Hi, Sebastian.
Hi, as you say, that's the big risk event of the day, isn't it? The ECB giving its last meeting of the year. No change expected there, but we will get the first outlook for the central bank for the next 2 years up until 2020. The Bank of England also a rate decision expected there. We got the first hike in a decade in November, so it's going to be a pretty quiet one, so economists expect. But we are watching out for any comments on market pricing in 2 hikes in the next 3 years. Will Mark Carney broach that topic? We're seeing the pound heading higher ahead of that decision in just a couple of hours' time. And we've already heard from the SNB saying inflation will breach its goal in 2020. You're seeing Euro Swissy heading higher on that. But taking it back to equities, as you say, we're heading lower for a second day. The miners are ahead, but they're getting outweighed by the majority of sectors that are falling. It's the likes of the tech stocks and food and drink that are dragging the index down by the most. One stock to watch in particular is Capita. It's a 12-year low, had its full-year trading update out earlier on. The market is unimpressed. Analysts at Morgan Stanley saying that it hints on weaker performance, no real growth guidance in that statement.
Okay, thanks a lot for that, Sebastian. Moving on from the global markets, 4 months into GST and the systems are still not up and running, says West Bengal Finance Minister Amit Mitra. Speaking at a panel at the FICCI AGM, Mitra said the economy as a whole is paying the price for the unpreparedness. His colleagues on the GST Council and Jammu and Kashmir Finance Minister Hasib Drabu had a very different view, though, saying it's only fair that the Council takes responsibility for what's happening and be proud of the fact that such a big tax reform has been rolled out.
Unpreparedness and its consequences. I kept on saying we are not prepared. I want to give you some sense of the e-system. It was in the month of May, and I think Dr. Drabu was saying something on this, I'm sure he'll tell you more. During the Empowered Committee period, I had 3 meetings as chairman when I was chairing Empowered Committee on the GSTN network. Now in May, first week of May or end of April, informally I met up with the professionals as a professional and I said, what's going on? I'll give you one example. That should suffice. How many invoices are to be uploaded per month? Sir, aap bata sakenge. You do law practice. Huh? 300 crores. 300 crores invoices will have to be uplinked per month. That means 3,600 crores of invoices will have to be uplinked successfully. Those uplinks will then look at IGST, interstate trade. You have to sort it out. That's a full circle. I don't want to get into it. Thirdly, input tax credit has to be sorted out. From 300 crores of uplinks per month. People don't know this. Then I asked them the question, how much have you done beta test on? They said 200 companies per state. 200 companies per state, you take 20 major states or 15 major states, how many companies? And those must be large companies for all you know. I said, what is your success rate? They said 30% definitely not successful. This is in the month of May. And you're pushing for GST to start on 1st of July. When I took that review, I was very nervous. What is this going to be? We don't know. Now, the return system. We had a GSTR 1, GSTR 2, GSTR 3. None of them worked successfully, the way that we wanted it. So what did we do? We simplified everything to GSTR 3B. Has that been fully successful? This is where the tax reduction comes from. Small and medium enterprises are not being able to uplink. Some would say they're not uplinking, but I would say I have taken a dipstick and I find that they are not being able to uplink. Manual systems have had to be introduced to grant refunds. Are you going to get your refund? manual system. As the refund module of GSTN is yet to become fully functional. Now the 4 mahina ho gaya hai. Many other processes are being dealt with manually, like advance ruling, still manual. Normal appeals, totally manual, because the system is just not ready. We have in the process gone back a few steps even from the VAT era. In the VAT era, we had completely digitized. Now we are still grappling with the fact that we've gone back to manual. By the way, you cannot correct genuine errors once you uplink. Nahi ho raha hai.
I can see the headline for tomorrow's newspapers. Mitra tears into GST. Whose GST is this? For the record, every single decision taken in the GST Council was by consensus. I will have many differences with what we arrived at, but that's what consensus is all about. Unlike anybody in the council, J&K is the only state that had no constitutional obligation to go along with GST. We have our own constitution. I, as the finance minister of J&K, draw my powers from section 5 of the Constitution of Jammu and Kashmir. And as my opponents in the state keep reminding me, I wrote extensively against GST. That will compromise the sovereignty of the states and the loss of sovereignty of states. But after going through the empowered committee deliberations and the deliberations of the GST Council and taking a long-term view, we actually got a special presidential ordinance issued for J&K so that we could participate in the GST regime. So I certainly would own up every single decision of the GST Council and take it that this is what I, not contributed, but participated, warts and all, everything. I have absolutely no regrets on what we have done. Benefit of hindsight, you can surely reinvent many things.
Okay, let's move ahead. There's a startup boom in the country. A lot of capital is being invested in new age technologies and solutions that could change the day-to-day lives of the people. But how to identify the ideas that can truly make a difference? Harsha Subramaniam caught up with Rajiv Sabharwal, partner at True North, at the sidelines of the IAMEI's Chief Digital Officer Summit to understand just that.
As far as the other bit on fintech is concerned, I feel a lot of innovation is happening on that space. A lot of innovation, in terms of new ideas. If you look at how we distribute credit, how we give credit is dramatically changing. A lot of information which was available there in the past but was never being used is getting used today to make credit decisions. People who are financially included today are able to get credit which was not available in the past. So they are making a difference. But the big challenge with fintech is how do you find the right partners to scale up? I think so that has been the biggest challenge with a lot of players. And this is where I think so big players have to work with the new fintechs to ensure that some of these solutions are really bought to customers. And that's very essential. I think so both should realize that they need each other and work towards making the life of the customer simpler.
What do you see when you meet technology startups or people in the space? What's the secret sauce? What do you look for?
No, I think so. When you look at there are a lot of things which will be common. You look for hunger. You will look for the need of the individuals why they are in this space. But I think so you have to look at the business model which is behind this. You have to look at what need of the customer is are they servicing. Is there truly a value add which is happening, which over a period of time can be monetized? If that is not existing, then it will become a challenge. The other thing which is extremely important in this space is the ability to scale up. Is it possible for this, this model to get scaled up, for more customers to adopt it, for more organizations to take it up? I would say, besides the hunger of the individuals, what one has to look for is there a truly value add for the customer which can be monetized, and second is whether this can be scaled up.
Foreign investors have been net sellers of countries' equities this month. Nomura has come out with a report that shows a reduction in FI ownership of the Nifty compared to a year ago period, which is not a surprise really. However, DIIs have increased the holdings in the Nifty, and what is interesting is the quantum of the rise and the fall. Darshan Mehta is standing by with more details on this report.
So this is an interesting report that's come in from Nomura. What they're saying in this report is the fact that FII ownership hasn't gone up much in the Nifty stocks. In fact, it's the DIIs that have actually taken. So if you're looking at it, this is the same period last year. This is second quarter FY17. The FI holding in Nifty stocks was 25.2%. It was 25.2% even in the last quarter, and now it's come down to 25%. So they've trimmed a little bit of their holding. But look at what DIIs have done. From 11% last year, same quarter, they've moved up to 12.2%, and this quarter they've done 12.3%. So this is the DII and FI picture as far as the Nifty stocks is concerned. Now individually, which are the stocks in which FIs did bet? So Bharti Infratel, Bajaj Finance, Tech Mahindra, they managed to increase their shareholding by almost 2 to 3 percentage point, 200 to 300 percentage point, 2 to 3 percentage points. Tata Steel and Hindalco, metal finds a lot of emphasis. So Tata Steel and Hindalco, both of them see traction that is moving towards them. What did they trim? Pharma as a pack and IT. So Infosys from 37%, they went down to 34% in a matter of 1 quarter. Lupin again from 31% to 28%. Dr. Reddy's, Sun and Adani Port. So Pharma as a pack saw a lot of selling that happened. Now, as far as what did the DIIs do? So DIIs bought in some of the counters which FIIs sold. So NTPC, Lupin and Infosys. So where Lupin and Infosys, you saw in the earlier slide that FIIs were sellers. So that is where DIIs were buyers. What did DIIs sell? They sold in a little bit of IT. Tech Mahindra is something that they sold off. Tata Motors, they've reduced their holding. And Hindalco, in which FIIs were buyers, they managed to sell. So that is the scene as far as the Nifty stocks are concerned. Mid caps also, it's very interesting. Just take a look at what FIIs have been status quo from 14.2% to 14% to 14%. So FIIs are status quo as far as the mid caps are concerned. But look at the rise of DIIs. From 7.7%, they moved to 8.2%, and within a matter of quarter, from 8.2% to 8.6% is something that DIIs have done in the mutual in the mid caps. Take a look at the stocks in which they have bought. Interglobe Aviation, what have FIIs done? From 5.8%, they've moved on to 10%. So that's a substantial increase. RBL Bank, a 400 basis points increase. India Bulls Real Estate, another 300 basis points increase. Jubilant Foodworks and Bata. This is where FIIs have been rather active. Where did FIIs sell? JSW Energy, Bharat Financial, CSC, Ipca Labs and Apollo Tyres. So there's no fixed standard like FI sold in the Nifty stock. Pharma, they're selling all across. There's no fixed standard that we're getting. But let's take a look at what DIIs did. They were bullish on in a little bit of pharma stocks and aviation stocks. So Interglobe, even DIIs are net buyers. They bought in significantly from 3% to 5%. Tata Global saw significant amount of buying. Ajanta Pharma, Ipca Labs and Bharat Financial. These are the counters in which DIIs became active. And what did DIIs sell? Banks. Union Bank, IDBI Bank and Bank of India is where they reduced their holding. Bata, again, there seems to be a substantial decrease as far as holding is concerned. And Jubilant Foodworks from 12% to 10.3%. So overall, what you saw as far as the September quarter is concerned, FIs pretty much held status quo. They didn't do much, but it was DII aggressive buying both in the mid cap as well as the Nifty stocks.
Well, on to some political news. The second and last phase of elections in Gujarat is underway, with 93 constituencies going to poll and prominent politicians like the Prime Minister Modi as well as the BJP President Amit Shah casting their votes. Well, there were also reports of EVM malfunctioning in some areas. Rahul Nair from the Quint is joining us with all the action there. Rahul, tell us about the voter turnout so far.
The latest reports are telling us that around 39% voting has happened across the state. That's a drastic increase from 11% that we reported earlier in the day. That was until 12 o'clock. That was until 10 o'clock in the morning. Now that we're past noon, we're almost around 1 p.m. here in the afternoon. The turnout has reached 39%. Chief Electoral Officer B.B. Swain just gave a press conference, and where he has been giving out details about the polling process that is underway for the second phase of polling. All the big names have already casted their vote. As you can see, people are rushing into polling booths here in Ahmedabad to cast their votes.
Prime Minister Modi commissioned the country's first made in India submarine Kalyari into the Indian Ocean Fleet in Mumbai earlier today. The submarine is capable of undertaking multiple missions, including the anti-surface and anti-submarine warfare, intelligence gathering, mine laying and surveillance. Prime Minister Modi hailed INS Kalvari as the best example of the Make in India initiative. The diesel-electric submarine is designed by French Naval Defense and Energy Company DCNS and has features like advanced acoustic silencing techniques, low radiated noise levels, hydrodynamically optimized shape, and is capable of attacking using precision-guided weapons. Kalvari is a Malayali word rather, which means a tiger shark. With that, it's a wrap on this leg of Countdown from Namit and myself and the team that put the show together. Thanks so much for watching.
The Gujarat elections is where it all started 5 years ago and where the next 5 years are going to spring from. Get in the loop. Join us at Bloomberg Quint's election coverage. Get the lowdown on everything related to this election. From business to pure politics to the development of human capital. We've got you covered. Elections 2017 on Bloomberg Quint.
Are we live?